Are you all able to see my screen?
Yes, maybe a little louder volume would be better.
Okay. Okay.
Go on, continue.
Is it audible now?
Yeah.
Okay. Okay. So today, as Shivakaran said, that we will be covering on the topics of incorporation basically. Like I would encourage you to ask doubts then and there itself, because sometimes when we move on to some other topic and other participants may get confused because we are talking something else. In this presentation, I am covering two topics. One is incorporation and another one is compliance part. Uh, in the compliance also, I'm going to concentrate more on the mandatory compliance, and I'll just show you what are the other compliance that needs to be followed for a company. But every entrepreneur need not start a company. They can have a different form of organizations like sole proprietorship, partnership, and even there are today there is something called Section 8 company, which our Atal Incubation Center is. It's a Section 8 company. So there are several forms of organization under which we can do businesses today. The purpose and or the choosing a particular organization depends completely on the business structure and the need for your funds and other participants, that is the founders. So we will just move on with the incorporation first. Yeah. So normally when they come for a incorporation, you have idea to start a business, and when they come for an incorporation, normally we find that they come out with a name which is already exists, or they will come up with a name, just one name. See, always you should encourage your entrepreneurs, or you being the mentor, uh, you should encourage the entrepreneurs to come up with several names, uh, because always there is a possibility that somebody might have taken a trademark. You will go and check your company's website, but you will miss out your trademark. Even if there is a trademark, then you will not get your company name. So basically, like, you should come up with at least 5 names. I would suggest, because it is mandatory for us to give minimum 2 names at the time of incorporation, and a maximum of four is what we give, and we recommend anybody who comes to incorporation to give 4 names, because the chance of getting the name approved becomes more. So that is the main reason why we ask everybody to come up with different names. So once the name is approved, then we will go with other incorporation procedures for a company to start. So the first thing is, once the name is approved, nowadays it is getting approved within, I have seen it is getting approved in a daytime as well. But today, since the whole the formation of company becomes a single form, earlier there used to be around 7 to 8 forms that we have to comply with, and the incorporation days were also higher. Nowadays it is the name approval is getting approved even in a single day, but we give a maximum day of 20 days. Within that time it should get approved. Then after that we have a company incorporation form, which is INC 32. It's a single form where through which you can get your PAN number, TAN number, PF, ESI registration, everything. It is a complete whole set. It is actually. Moving on to the incorporation documents, first we will take a director identification number. That is basically for every director, a particular number is given. It is a unique number through which his directorship is established. the director identification number will not change across companies. That is, let's say there is a director for and he is acting as a director for 3 to 4 companies. In all the 3 to 4 companies, his director number will be same. So it is like one time registration process. Like you have to take you have to file application, and you will get allotted a din. For this particular director identification number, we should have that is basically there is a yearly KYC compliances, which many of the people uh, forget to do, or they don't think it is important. The problem with not doing it is, the moment you don't do your director KYC, your directorship is getting will get cancelled. That means you are no longer director. Let's say a company which is having only 2 directors. For a private limited company, minimum 2 directors is required. The moment one of the director get or his director identification number is cancelled, that means it is going to affect indirectly the uh, uh, incorporation status of the company itself, because now you have only one director, and either you have to become a one person company, or you have to close down your company itself completely. There are process where you will go fine, pay the fine, and get your din recovered, but that is a lengthy process. We always suggest them to go ahead and do it yearly once. It is hardly going to take around 30 to 40 minutes for you to do, and it is always better to do it as well. It will not cost you more than 1,000 rupees. Even if we employ a outside agency, it will not cost more than 1,000 rupees for it. Then there are people who are getting confused when they come to us. We see that they get confused between the capital structure. In company, there are 3 capital structure. One is authorized, the another one is subscribed, and paid up. The authorized capital is what we have to say, like it is a maximum limit that you are informing to the government that I will not increase capital more than this. It is a temporary limit. Actually, it is not a permanent limit. If you want to increase it, then you have to file it with the government again, stating that I want to increase the authorized share capital to some extent. Okay, the extent, there is a minimum extent, then there is a maximum extent. Based on this authorized share capital, you need to pay stamp duties and taxes, all those things. These are all one time charges. Okay, then coming to subscribed share capital, out of this authorized share capital, the directors will subscribe to it. That is, the founder or director will subscribe to those share capital. That is, let's say you have 10 lakhs as your authorized share capital, and currently you think that I don't need 10 lakh share capital because it is starting of the business, so I need only 5 lakh rupees as share capital. At that time, the directors will subscribe. Let's say there are 2 directors and their share ratio is 50-50%. So they will, one of the director will subscribe to 2,50,000 and the other director will subscribe to 2,50,000. So this 2,50,000 and the next 2 lakh, totally 5 lakh rupees will become the subscribed share capital. The paid up share capital is the director has to deposit the amount that they have subscribed within a particular time in the company's bank account. Now they have to pay it. That is, the director has to deposit the 2,50,000, each of the director, and it should become 5 lakh rupees. So this paid share capital is called as paid up share capital. Let's say if they have paid only 4 lakh rupees, then the 4 lakh becomes paid up share capital. Balance 1 lakh is pending. They have to deposit. There is no excuse. They have to deposit. If they don't deposit, then their shares will be forfeited. If the shares are forfeited, then your subscribed share capital will not match with your paid up share capital. So there are lot of other complications which go hand in hand with that. Next is the registered office. In terms of registered office, even I want to make a request to Shivakiran sir. I think one of your incubatee I think Vaishnavi had a difficulty because of this in the agreement form. Later I will just share an agreement with you with this with a similar incubation structure. We are a partner with another incubation center as well. It is like, see, at the time of incorporation you have to say this is going to be my registered office address, and for those, for in that address name you need a electricity bill, telephone bill or gas bill. Okay, only these three documents are allowed, and it should not be more than 2 months older. The
I have a question here.
Yeah.
See, telephone bill, electricity bill is fine, but why gas bill is considered? Because this is a commercial entity. It's a like for house it's fine gas bill, but why for a office? No, somebody uses gas in office unless it is a hotel or something.
No. The point is your registered office need not be your commercial entity.
Okay.
Okay, there are companies which have started in a house structure. That is, I have a residential house. Probably I'll use the front room as my company.
Okay, that's what I want.
It is there. So it is just address proof. It doesn't serve anything else. But
right.
The address that you have, that is appearing in the proof, and the name, the founder's name, should be
matching.
Should match exactly as it is given in the application.
Okay. Right. Okay. So suppose the startups normally will be in an incubation center, right? Even with incubation center or any other incubation center, even in the colleges, sometimes college management might allow students, okay, why don't you start in the college campus itself? So in such cases, colleges such cannot give current bill, right? Electricity bill.
No. Bill. They can. That's what I told. I'll share the proofs and documents with you.
Right.
It is like, let's say there is a owner. Okay, and you are taking a rental premises.
Right.
The electricity bill will be in the name of the owner.
Correct.
But then you will have a rental agreement.
Correct.
Now in the rental agreement, the owner name will be mentioned, obviously.
Correct.
Because it is going to be the agreement between these two parties.
Right.
So the owner name which is appearing in the rental agreement and the owner name that is appearing in the electricity bill should match.
Okay, it's like rental agreement. You can watch there.
Correct. It's correct. Okay. So similar to that, you have to provide your incubation center's electricity bill along with the. I think you have a similar agreement, right?
Right, with Adi Foundation, with another foundation, right?
Okay. So you need to provide that.
All right.
With these two things only, we will be able to go for an incorporation.
So faculty can take note of that. Or you can make such arrangements in your colleges in case they want to start their companies.
Correct.
Offices.
Correct.
Okay, please go on.
So that is as far as the registered office is concerned, we saw. Then you need ID proof and address proof for all the promoters. So basically it is a PAN card, Aadhaar card of each promoter for ID proof. And if you have a rental agreement or other address proof, it will be accepted. It is similar to the telephone bill, gas bill, all those things. And again, the note is the name and address should match. That's what we spoke about in the starting. And coming to the digital signature, today the digital signature that we do is by way of authentication with video recording. There are applications which once you come for digital signature, we will be guiding you. So these are all the documents that is needed. Normally they come up with asking what are the documents needed, what are the documents. It's basic, you need a 2 passport, a PAN card, Aadhaar card, mobile and email ID, because all the communication that is taking place today, since everything is in digital, either it will be communicated to you through a mobile SMS or to your email ID. That's how it is, and that's all it is with the digital signature is concerned. Today now they have come up with fast track applications. So with just Aadhaar number you can get a digital signature. You need not go with full verification, that is video verification, all those things. If you have Aadhaar, then you can just directly activate, and specific application will not be a requirement. So I'll just show you the spice template. This is a one single form that government has introduced recently, with which you can get almost every registration that is needed for a company. So basically, all these details that will be submitted by your chartered accountant or company secretary, whomever you are going to appoint. If you see, like for every step, normally people will say like, what is the issue? Like, I have seen many people going to different chartered accountant because we were not able to file it. But the problem for not able to file was the name that is appearing in PAN and the name that they have given in other proof are not matching. They think that this particular chartered accountant is not able to do things like that. If you see, there is a verify button here itself that says that the moment you enter your PAN number, everything else will get verified. Today, everything is connected with the income tax department website, and passport is today. Today there are digital passport that is coming out. Aadhaar is digital. Everything is digital, and today the verification is taking place at a very faster pace. Within 5-10 minutes, the server is able to verify all the details that is filled up in a particular application. So once you choose a chartered accountant, or your entrepreneur who chooses a chartered accountant, you just do whatever they are saying. They will guide you. I agree, there are times where people are getting fooled. Unnecessary registrations, unnecessary compliance work are being done, or chartered accountant charge uh, more rate, things like that. But I would suggest you to stick with one particular chartered accountant, whoever it is, whether it is through us or through somebody else, it does not matter. But whatever they say, you will just comply with it. There are incidents where, like, uh, a particular entrepreneur to whom we incorporated was having some doubt. So we were having doubt clearing sessions, things like that. And he discussed it with his one of his friend, who was also a chartered accountant, but he is not currently practicing. He did chartered accountancy probably some 5-6 years, and then he went to company. So he did not know the recent amendments, things like that. He suggested that particular registered office need to be, once the registered office is commenced with, it needs to be filed with the government of India within 60 days. There's a specific form to it, and your chartered accountant did not do it, so you are going to attract fine, things like that. The recent amendment states that if you are able to give the registered office address at the time of incorporation itself, then you need not file a particular form. Now the entrepreneur who thinks that his friend is right comes to us and keeps on saying that it is wrong, my auditor has told, now see, at the starting of your relationship between yourself and your chartered accountant, you are having a negative start. It is like you are not believing your chartered accountant. that's why I'm saying, once you go to a professional, it can be any professional, even if you go to a management consultant, uh, you are hiring them because you are lacking in some expertise. So they are there to guide you. So always stick to their guidance and just follow. Nobody is going to put you in a worse scenario and loot money out of you. There might be some 5%. 5% itself is exaggeration. Probably 1% of such professional might fool you. But it is very much needed that you believe your chartered accountant or cost accountant, company secretary, management consultant, any professional. Like once you go to a doctor, you will believe them and you will tell everything to them. In a similar way, you should tell everything to your chartered accountant so that he can protect you well in advance before any income tax query or your companies act notice or things like that. Because as an entrepreneur, you are supposed to concentrate on your business. All the other aspects, that is the compliance part, a company secretary or a chartered accountant will take care of it completely. All that you have to do is, whenever you take a major decision, you just discuss with them. They are not going to disclose it to somebody else because there are professional contact under which we are covered. So nobody is going to take out your idea and tell to someone else, things like that. It will not happen. At least I have not seen in my forum where it has happened. So always believe in your professionals. So moving on to the compliance part, that is the mandatory compliance. Apart from the incorporation, once the incorporation is over, we have all these one-time compliance that company has to do. A company or a LLP, because it is going to be something which is similar. When you go for limited liability partnership, the company format and the limited liability format always go hand in hand, because it is both are a limited liability concern, where in company you are limited to the extent of shares and there are different other limitations as well. For a limited liability partnership, you are limited to the extent of your capital. So all these compliance are more or less similar between limited liability partnership and any company format, whether it is private limited company or public limited company. So you need a company name board. The name board should be in your local language as well as in English. It is mandatory. You should give it in your local language as well. I find many times that the company name board is given only in English or only in local language. It is not allowed. You have to give in your local language as well as in English. And it should be outside your office, not inside your office premises. In case of incubation centers where you have given a kind of cabin kind of setup, outside the cabin, because everybody cannot put up their name board outside the incubation center. If such facility is available, like you can say cabin number 1, 2, 3, everything, you can put up a name board. It is well and good. If it is not available, then at least outside the cabin you should be able to do in an incubation center setup. If you have a proper registered office, then outside the registered office, it is mandatory to display your name, the company name which is approved and under which it was incorporated. Then company rubber stamp. Earlier we had company stamp, company seal. That is completely different from the rubber stamp that I am talking about. Now the company seal provision has been removed and it is no longer required. Only the round seal or the way you want it. I have seen some of the companies having a square company rubber stamp. There is no restriction on that. You can have the way you want. So that is one thing which is mandatory, because you need to give your seal on all your legal, that is all your company documents. In the sense, anything that goes out of from company to some other third party, you should have your seal. Without seal, it should not go out. It is a very good practice that you follow with the seal. Sometimes without seal, it may not be validated as a company document as well. And then you need a seal for each of the director to sign. It is not a mandatory one, but I prefer to have a seal with stating that director's name, his designation, if it is that is director or managing director. Then go with that is basically, it is a for seal. So they will say for company name, particular director name, and his designation. That's how the seal design is. Probably we can, if any of your entrepreneur or your student want to start a company and they want to have a for seal, probably if they Google, they will be able to see, or if they are not able to find, I think Shivakaran sir should be able to help. They should be having a for seal as well, so they can just see it, things like that. Then you need a letterhead, because all the communication that is going out of company should be in the letterhead. That is, at least in the front page, it should be letterhead. Post which you can use a A4 sheet or things like that. And earlier I said that the directors are supposed to subscribe to a share capital, and they have to pay. The moment they pay for the paid up capital, they have to issue a share certificate. Basically, the capital is in the forms of shares at a particular rupees or price. So for that particular price, these many number of shares, the share certificate should be issued within 60 days of becoming their shareholder. That is, today I am going to pay fee and I am going to subscribe to their share. Then within 60 days of allotting the shares, I should issue the share certificate to them. Then INC 20A. This basically, like, without filing this INC 20A, you are not supposed to do any business transaction. Within 180 days, it should be done. If it is not done, normally when we do it in the first week itself. First 2 weeks of incorporation, we will ask them to do. There are certain procedure which needs to be followed. If it is getting delayed, then the form 20A as well will get delayed. But normally we encourage them to do it in the starting itself, because you will not miss out any client because of this. You, before doing any commercial transaction, you need to file this form. Without this form, do not start doing any commercial transactions. Then this is basically like within 30 days of incorporation, you need to appoint an auditor. You have to decide who is going to be your auditor. You cannot appoint an auditor at year end. You have to appoint it within 30 days of once you start the company, appoint an auditor. After that, auditor will take care of everything. So first thing, within the first month, you should appoint an auditor. For that, there is a particular form. You need to file that form and appoint an auditor. The auditor also has to give him a approval that he is going to act as your auditor. Okay. So these are all the one-time complaints. That is, at the time of incorporation, you are supposed to file all these forms before commencing your business transactions. Apart from this, a company format has annual compliances. Like as I said earlier, there is a director KYC form which you have to do on a yearly basis post incorporation. This, as I told you earlier, this is just going to be needing your ID proofs or your residential address. It is just to know that you are staying in the same address, or if you have moved, then you have to change the address, you have to change your communication details, things like that. It is nothing more than that. It will hardly take 30 minutes for anyone to complete this process. Then there is a, see, once you are in a company format or any format, I would suggest you to maintain a proper books of accounts with a professional help, or like you can appoint a accountant, or you can outsource your accounting work. Like we normally take the outsource of accounting work, things like that. Always maintain your accounts. Without accounts, you will not be able to track what is your expenditure, where your income are getting leaked. You will not know how much of fine you are paying to government, because you are not maintaining accounts. You will not have track of your sales or purchase, things like that. Sometimes you will miss out some purchase, or the uh, uh, benefits that is available in the form of input tax credit. Don't get confused what is input tax credit. We will see that little later. So such benefits you will miss out, and you may end up paying extra tax, or you may end up paying lesser tax than you are supposed to pay, because you are paying lesser tax than what you are supposed to be paying. Government will be charging penalty for you. All these problems will occur if you are not maintaining proper books of accounts. So I always recommend you to go for maintaining books of accounts. At the starting stage, if you are not able to appoint a dedicated accountant, just hire a part-time professional who will come and do it for probably monthly 4,000, 5,000 rupees. Today there are many part-time people who are performing this accounting work. Probably like weekly once, they'll come, monthly twice, things like that. Then there is out of that accounting, we normally, for a company format, we will file a financial statement, that is the audited financial. Auditor will find audit your books of accounts, and if there is any problem, he will state it in his audit report, and then he will file the financial statement with the register of company. And the management has to file your annual return, assets, liabilities, and other operational details of the company, like what is your total turnover, things like that, in the form MGT7. All these forms, your chartered accountant or the company secretary should be able to assist you. Apart from this, there are certain norms where you have to conduct mandatory meeting, that is board of directors meeting, shareholders meeting, annual general meeting, things like that. All these meetings needs to be conducted within a particular time. There is a time frame for each of these meetings. It needs to be conducted, and the decisions, that is the key decisions that is taken in this meeting, and the people who have attended the meeting needs to be registered in a book called minutes of the meeting. And this minutes of the meeting, either you can, or your company secretary, somebody should maintain it. This will help in the long run as well. This is statutory requirement. Apart from that, even if there is no statutory requirement, it is good practice to maintain what are the ideas that, let's say you are having a meeting, a brainstorming session or things like that, and you have come up with several ideas and you have not noted it down. Then at a later stage, you may not get same idea. So it is always good practice to keep keep a document of a meeting, any meeting for that matter. It need not be a director meeting. I'm talking about any meeting. It needs to be documented. Any brainstorming session is very much important at the starting stage. Since you are going to be the mentor, I would request you to be part of the brainstorming session when it happens. 2 or 3 students may join together, and they start brainstorming, and I want you to be, if possible, I want you to be there in the session, so that you can guide them through all these points. If somebody is not maintaining, you can ask them to maintain this will help in the long run as well. Then there are several need-based compliances, which like if the register office address is changing, like a company is getting moved from Guntur to Vijayawada, or from Andhra Pradesh to Telangana or Tamil Nadu, things like that. There are forms which needs to be filed with the company register of companies. Also, if you are going for a bank loan, at the time of bank loan, if any of the asset, if any asset is being pledged, that is the company's asset, if any company's asset is getting pledged, then there is something called charge needs to be created on a particular asset. These are all needed because this comes in handy at the time of dissolution. So statutory audit, it is a yearly mandatory audit which is needed. Particularly for this purpose only, we are appointing an auditor at the starting of the year itself. Then there is a tax audit. Apart from statutory audit, if your turnover crosses 1 crore rupee, then this particular tax audit is mandatory. And this tax audit can be done by either this tax audit needs to be done by a chartered accountant. Then you have a GST audit, which is like once you cross 2 crore limit, GST audit becomes applicable. That can be done either by a chartered accountant or a cost accountant. Cost accountant is somebody who has completed his CMA, that is chartered management accountant or cost and management accountant, or earlier it was called as ICWA, Indian Cost and Work Accountant. So either of these two qualified people will be called as CMA. Then you have chartered accountant as usual. So only these two people can do the GST audit. When it comes to tax audit or statutory audit, it is only a chartered accountant who can do. So basically, a chartered accountant can do all these audit. Any audit a chartered accountant can do. GST audit can be performed. GST audit or cost audit can be performed by a cost and management accountant. So coming to GST, many people will ask whether GST registration is mandatory. Normally, the outside practice is the moment you go to a GST practitioner, normally they will push you to go and get it registered. But as per the law, unless your turnover crosses 40 lakh rupees, whether it is through goods or through your consultation or your services, unless it crosses 40 lakh rupees, GST registration is not mandatory. But when you need a GST registration, the moment you get your GST registered, like there are times like certain companies will not accept, will not buy goods from you if you don't have GST. They have certain procedures. In that case, let's say you are going to get yourself registered under GST Act, and your turnover is not crossing 40 lakh rupees. Then the moment you registered, don't think that because you are not crossing 40 lakh rupees, you need not file return or things like that. The moment you registered for GST, you have to file monthly returns or quarterly returns if you are taking a composition scheme. Composition scheme is nothing but a simplified GST tax registration when your turnover is less than 1.5 crores. So the point is, in the composition scheme, you can file quarterly return, and you need not collect tax. Basically, you are not supposed to collect tax on your sales, and but you have to pay tax. We will guide you on all those things when you come to us or to any practitioner. When you go, they will guide you what are the mandatory return which is needed to be filed at the time of GST registration. So, but the one thing that you need to remember is these 40 lakhs. If it crosses 40 lakhs, your turnover crosses 40 lakhs, then you need to go for GST registration. It is mandatory. If you don't go for GST registration, then the penalty is applicable. And if it is less than 40 lakhs, you need not register. in case your business environment needs you to get it registered and follow all the GST return laws. You need to file monthly return or quarterly return on the basis of your registration category, which is mandatory. And your turnover, if it crosses 2 crore rupees, then then the GST audit becomes applicable, which will be performed by a chartered accountant or cost accountant, as I said earlier. So these are the percentage of tax that needs to be paid. I would not ask you to worry much, because this will be taken care by your chartered accountant. You need not worry. But just for information, you can know what is the tax percentage, things like that. However, after deduction, at the starting stage, I don't think many of you will be facing any problem. So that's about the tax structure. Then now whatever we saw is more of mandatory tax structure. Mandatory compliances. Okay. Then there are other compliances which needs to be followed. Like there are several compliances. I'll just take you through it. I'll not be discussing each and every compliances. Just to show you how much it is important for you to be conscious about the form of organization that you are taking. Many of you want to get it registered as company. Even from our side, we recommend going for a limited liability partnership or a company than a sole proprietorship, because it always gives a front end picture that you are having a company. The moment you say a company, it adds value to the whole business environment. So that is the main purpose that we ask people to go for a LLP or a private limited company at the starting stage itself, because today there is earlier people used to say that for a company we have to have more capital, because there are forms of there is a business where you will do only services, where you don't need any investment asset. It is completely out of your talent that you are going to do, and you don't require any capital. In that case, why should you go for a company? This I'm talking about in the earlier law, Companies Act 1956 and all. A minimum of 1 lakh is required to start the company. But today, after Companies Act 2013, you can start the company even with 1,000 rupees, as low as 1,000 rupees. So today, it is always better to go for a private limited company with even with just 1,000 rupees of share capital rupees. But you can always choose. Let's say you want to be in a partnership, and even people will say that we have registered the partnership firm. Why should we go for LLP? See, the benefit is, it is very good to assume that everything will be positive. But in case of negative circumstances, that is when you are going in loss. Let's say you have a loan which is taken in the name of the company. At partnership, if you are taking loan in the firm's name, or you are having, let's say you have purchased product and you have used it, but you have not paid your supplier. In those cases, they can file a lawsuit against you, and all your personal property, I'm underlining, in case of registered partnership or a sole proprietorship, when you are unable to pay your supplier or unable to pay the loan that you have taken, all your personal properties can be seized. But when it comes to limited liability partnership or a company format, they cannot touch your personal property. Any property which lies within the scope of the company, in case of company, it is company, and in case of LLP, the firm, whatever the firm or the company has purchased or the company has incorporated in the form of capital, only to that extent they can charge you, or they can take away the asset, or they can put it in the market. Other than that, your personal properties are always safe. So that is the major benefit that you get out of going for a LLP or a private limited company. Apart from that, when you go for a bank loan also, the moment you are in a company format, I have seen bank manager who are comfortable in allotting a loan to a company than to a sole proprietor. The point being, the company has the capacity to raise the capital from public. See, in case of a sole proprietor, the moment I go and take loan, let's say I am going and taking some money from my friend, and I have to give back that money to my friend. When it comes to company, if the money is taken in the form of equity, I need not give back that equity before settling all the loans. So bank always prefer the company format or the LLP format, because the equity portion is the money that you have got, but it need not be repaid before repaying the loan. So from bank's perspective, their loan is in the safer hand when it comes to the company, but it is bit riskier when they are giving loan to the sole proprietor. So now we will see the other compliances. Just to show how many compliances are there. When you go for a company, definitely it is all situation based. No company is going to comply or need to comply with all these compliances or all these provisions. These are all need-based provisions, need-based compliances. Only when you are in certain situation, it is required. For example, there is something called Articles of Association. There is a document called Articles of Association, which states what are the rules that are going to be followed inside the company. Okay, it is just inside the company. In case of this, whose permission is required, things like that. Okay, so it is basically the rules and regulations that are going to be followed inside the company, and you are going to change some rule, probably some 5 or 6 rules that you are going to change. In that case, you need to go and file the alteration of AOA with the register of company. For that, you have to take a special resolution. So all these things are mandatory when a particular need arises. Just to show, see, there are around 20-page document it is. There are several complaints which are needed. It is not to scare you, but to make you aware that how much it is important for you to be aware of these compliances, or to inform the decision that you are taking to your chartered accountant, because he can guide you whether this particular decision that you have taken or implemented requires a statutory compliance. He can guide you. Always keep your business decisions informed to your chartered accountant or to your company secretary, because even company secretary can do many of these statutory compliances. There are provisions which states how much of salary should be given to a director. It is not applicable to everyone, but the moment moment it is applicable, then the director cannot take more salary. If he is taking more remuneration, then there are certain resolution that needs to be passed. So things like this are there in place, and sometimes the business owners tends to not inform their chartered accountant, and at the end they suffer with fines, because the Companies Act 2013 is very strict when it comes to the compliance part. If there is non-compliance with any of the set provisions or the mandatory provision, then the fines and penalties that the law levy on each and every company is huge. The moment you don't pay fine or penalty, there are certain section which goes for even imprisonment of the directors and things like that. So I want any entrepreneur, as a mentor, I want you to inform them how much it is important for them to take uh, uh, complaints, statutory complaints as serious as possible, and keep their chartered accountant informed about the business decisions that they are taking. So now I would like to take any questions that you are having, and I'll try to answer as many questions as possible. In case if the time does not permit, I'll take up the question from Shivakiran sir, and I'll try to answer it to it at a later stage.
Your last point when you're saying this, legal, what is that called? Punishments or penalties to the directors. But normally, when the directors are taken in, there will be some kind of indemnification and remedies, right?
See, what do you mean by at the time of taking a director? Because I did not understand.
So normally, if a startup initial stages, only the two founders will be the directors. Minimum 2 directors in it.
Correct.
So I am a professor, so I think that my requirement is there in a certain startup. So they asked me to become director. Okay, I'll become a director. So I do not understand the day-to-day operations. They had taken me only for particular my skill set, right? Either fundraising or connecting to the big people. They have vested interest, right, to take director. So I do that. But many times companies, they don't know what we do not involve into day-to-day operations. Sometimes knowingly or unknowingly they get into which are not legally acceptable activities. It could be accidental also many times, like infringements or copyright violations. So how directors will be protected, because it's happening without direct
see, by law, any director, okay, any director of a company are allowed to take part in the. It is mandatory, in fact, for them to go and take part in the directors meeting, and directors are allowed to check the books of accounts as well. See, it is the moment you have become director, you should make sure that you know everything that is going on within the company, because you are not protected.
Right.
Because just because you are there for a particular consultation or technical support, you are not protected by law by any means. If the company is doing wrong, then all the directors are equally responsible.
No, the reason I asked is many times the faculty in the universities, you would have seen in IIT Madras.
Correct.
A PhD student will become a startup based on his idea from thesis, and as the guide is also part of the invention.
Understood.
They'll take him onto the guideship, and the professors they'll become directors in any number of companies. They'll not be able to follow it up. So they should, that's going to happen in every college.
See, there are two things for which you are becoming a director. One is to guide the student in the right path so that he succeeds in a commercial way.
Right.
Then another part is both yourself, that is the guide, and the PhD scholar or the PhD student. They have combinedly done a research and they have found a new product or solution, out of which the commercial benefit needs to be shared.
Right.
Okay. So these are the two cases where professor or the guide becomes the director in the company. Otherwise, it is if you are not going to get involved in the business decisions, if you are not going to participate in business, do not become a director. Okay. Now there are two situations which I told. So first thing is, because you want to guide them, you are becoming director. To guide them, you need not become a director. You can become a consultant.
Yeah.
Okay.
Right.
If you want to if you want to receive a commercial benefit out of the invention that both of you have done, again, you need not become a director. You can always have a royalty agreement with them, through which you will be able to get your commercial benefit as well.
Okay.
So my suggestion is, if you are not ready to participate in the business decision or actively participate in any of the business part, do not become a director, because any non-compliance will affect you as well.
Okay. Right. Good. So is there any limitation that a particular person can become a director for any number of companies?
Okay. The maximum number of companies that one can become a director is only 20. You
Okay.
cannot become a director more than 20 companies. It's not allowed.
Okay. Right. Right. Then there was something called OPC. That's something very new. Can you shed some light on that?
Okay. See, 1% company is model. Like it is a new form of company that came in with the Companies Act 2013. Earlier, a minimum of 2 directors required to start a company. To encourage the entrepreneurship and the innovation, the government of India came up with this 1% company part, where this particular company is treated equally with the private limited company.
Okay.
The compliance and everything else is same. Only thing is like you will have only one director in the company, and it is not actually a 1%, because this particular one director should have a backup person. It is similar to a kind of guarantee. That is, in case of demise, or if he goes out to some other country and if he becomes lunatic, things like that. The law requires somebody else to take charge of the company and dismantle all the liabilities and things like that.
Right, right.
So you need a guarantee from somebody else. It is actually a 2%, but only one person is responsible for all the compliance part, things like that. Only when his presence is not there, or he is not in the capability of entering into a proper agreement, or he is not able to make a proper decision, then the person comes into the picture. The other person comes into the picture. Otherwise, only the one single person will be there in the front end of the company.
Okay, as I understand, as long as that 1% is that he is executing all the deals and everything, till such time he is mentally capable, or law allows him to do, right? So only 1% can make all the deals. You don't need 2 directors' signature, 2 directors' permission, nothing.
Correct. Only one person is enough.
Only person. But in regular conventional private limited, you need to have the signature and agreement and the board resolution of both the directors in all the major decisions.
Correct. On all the major decision, it is required. And also, like there are times where, let's say, it says 2 directors. It does not say 2 resident directors. Okay, I can have a director who is in foreign country.
Okay.
Okay. In those times, the foreign country director can give a power of attorney, stating that it is not a power of attorney. Basically, it is a board resolution again, where they can say that all the decisions can be taken. Yeah, it's kind of authorization. All the decisions can be taken by so and so director.
Okay. Okay. Right. Right. The reason I was asking is these are the common things that we come across with most of the startups. You would have seen our Vishnuvardhan having 1% company. Right.
Okay.
And see, sir, here there is one issue. You said that initially entrepreneurs can get into, single ownership or proprietorship or firm. Then later they can, move to private limited companies. But Startup India clearly, the Gazette of India clearly states startup by definition is minimum is a LLP or firm.
No.
It cannot be
For a startup India. For a startup India, it has to be a registered partnership,
registered
or LLP, or a company.
Okay.
It has to be a registered partnership, because a partnership firm can be started without registration as well.
It's a mutual agreement.
It's just a mutual agreement. I can start off the business. That is not considered as a startup, as far as Startup India scheme is concerned.
Okay. But you can still run the business if you want.
Correct,
but if you want to avail the call, if you want to be called yourself as a startup, as per the definition with the DPI number, DIP number,
it has to be registered
firm.
Correct. It has to get it registered from Register of Firms.
So and it is exempting the. I mean, that list does not take proprietorship into consideration, I believe.
Correct. Proprietorship is not
allowed for a startup.
Yes. Correct.
So because some of the people, especially women, homemakers, degree holders, they want to start on their own independently from home. And many
Okay.
times they come with this particular proposal, I want to start on my own.
Uh-huh.
So I think, as I said, I would suggest them to go for OPC.
Correct. They can go for OPC. Or today we have, if it is not going to be, if you don't want to get it registered under Startup India scheme, things like that, then you can go with self-help group structure.
That under is fine. No, but when they're coming to incubation center, they must
if
have
they
this
are
PhD
coming to
also.
incubation center, then you have only 3 options. One is LLP, OPC, or private limited company.
Right.
Or even public is allowed, but I don't think
at this stage, I don't think anybody will be.
Anybody will be going for a public limited company.
No, not possible. Okay. Right, sir. Thank you very much. Any audience, anybody has questions to ask? Okay, can you shed some information about establishing Section 8 company? Because most of the faculty here would be some point of time in future will be setting up Section 8 company.
Okay. Section 8 company.
Yeah. Because they will be applying to government, MSME or NRDC, DST, some funding, any funding agency, then they apply. It is a minimum thing that expert is a Section 8 company, which is very easy for education institute to set up as a special way.
See, Section 8, when it comes to Section 8 company, you have to be very clear. One thing is you cannot take away the profit. Okay. In case you are getting any profit, it cannot be shared
dividend.
By means of dividend, or there is no way you can take away the profit. Yes, you can pay yourself salary and things like that, but still it is restricted. So now that we have established that it is going to be a not for profit, it is very clear, the section itself is clear that it is not for profit, and it can be started only for a specific objectives. The objectives have been listed down, like it can be for promoting entrepreneurship, it can be for promoting education, it can be for promoting agricultural activity,
science,
things like
technology,
that.
culture.
Science and technology. So the law is very clear that certain objective only can become your business objective. Other than that, if you have anything, you will not be given a Section 8 company sanction. For Section 8 company, you have to specifically apply with the central government. Apart from the normal procedure, we have certain other forms that needs to be filed. But the moment you have Section 8 company, then any that is a kind of donation things you are going to collect, you can get exemption from income tax department for ATG. That is, you have to register for ATG, and then the deduction that is given to the company can be claimed as the donation that is given to the company can be claimed as deduction by the person who has donated. So these things are there. So when it comes to Section 8 company, it is very good because you are going to achieve some better goals apart from making just a profit. So it is very important. Many Section 8 companies should come actually. So let's see.
At least, this is very important because, as you said, they can generate revenues, they can get money, but they have to route it back to the same activities for which it has been established.
Correct.
Suppose somebody wants to provide some tribal education, they can raise money, they can get profits out of the products they can sell, but the profit again has to go back to setting up more such centers or promoting such activities. It could be art, culture, music, anything, right?
Correct. Earlier, if you see, it was there earlier as well, but it is not as famous as it is today. Earlier, it was called a Section 25 company. Now it is being called a Section 8 company.
Right.
The point is like, see, when you are doing something good, you are trying to do some good to the society, and in the trust or other forms, you cannot do such business. By Section 8 company, you can do business to any stretch. Like a normal private limited company, you can do business and take the profit and do good to the society.
I feel this is very wonderful combination of trust and corporate.
Correct.
You can run it like a corporate,
but
you can have a compassion like a trust or a society.
Yes,
So I
yes.
think this is very good combination. In fact,
It
our
is a very good
organization also like that. Our core sector is to create employment, innovation, which is again asset to the country, which is a selfless activity, I should say.
Correct. Correct.
But to achieve the selfless activity, you need to have amazing corporate style of working.
Exactly.
Because that gives
Exactly.
highest efficiency. Everybody knows that corporate working style is the best in
Best.
a
Correct.
given point of time. So government has given this kind of system to be executed, where you can have corporate best and compassionate heart. I
Correct.
think that's where Section 8 company comes into play.
Correct. Correct.
Okay. So, and I also made a point, Section 8 companies can give exemption for the donations. I think that's a new amendment. I think they brought it, right? Last 1 or 2 years back.
No, no, no.
It
It was there.
is under CSR, sorry, under CSR.
No, CSR was like by default, Section 8 company itself is a CSR. So for Section 8, okay,
Correct.
you mean to say
Incubators.
the
I'm
company
referring to
can
incubators.
donate to Section 8 company and it can be called a CSR activity. Yes,
Yes.
that is brought in.
No. My point was I could not rephrase it. Incubators have been brought under this last 1 year.
Yes, correct. All the incubation centers are.
All the incubation centers are considered as CSR. They can that you can take note of education. All the colleges and universities.
Correct.
This is another avenue where you can get a lot of funds. Not only government, you can write to government like MSME or NRDC or
Exactly.
anywhere you can write, no problem. But alternatively, you can also seek out to corporates for they have a lot of money for under CSR. It's a mandatory for all corporates to be under CSR.
In fact, I think Shivakiran brother should be knowing. One of our one of our alumni. He is doing a social service.
Vinod Karthik.
And
I am in touch with him.
So he's doing a social service and he is issuing a certificate to the companies.
Right.
The companies will pay for the social service, but the
Right.
company will not participate in the social service.
Right.
If they want, they can, but generally they don't, because for them it is a man-hour loss. They would have done some other.
In fact, correct. To see this, participants can take note of this. This person by name Vinod Karthik. He was working in corporate sector for quite a long time and is a very successful person also. He started Sai Krishna Charitable Trust. It is a trust actually. It's an orphanage, school. So many things are there. It was total not for profit, but now they have another wing where they do profit. Both are different. One runs profit, another is not for profit, but the activities are same. They are helping the education sector. Very nice. So I think this is a very good combination. When you're setting up incubation centers, you can take note of this. You can also explore a lot of corporates in and around your sector, where you can take money from them and invest in science and technology. That's a good thing.
Correct. Instead of depending on the government grants, you can always go with corporate grants. Like let's say, let's take TVS group, and they want to develop. I was reading today that TVS has developed a engine with a fuel efficiency of 110 kilometer per liter. Okay. And they have gone into the Guinness Book of Record. I think it is in Asia. It is a record. They have come up with the bike model TVS Sport with 110 kilometer per liter fuel efficiency. And if the university, when the university and the corporate come in hand, the fund requirement for a particular research project can be taken care by the company which is going to use your innovative findings or solutions.
You can check out Mariwala Foundation. They are doing Mariwala Britannia, and now Bharati is doing. Then Infosys Foundation is doing. All of them are having their own incubation centers. You may be aware in Hubli there is a Deshpande Foundation, which is run by Deshpande Group of Industries. That's their relatives of Infosys Sudhamurthy. They have millions of dollars, so they are routing it to incubation center. Okay, so that's a good thing. Okay, all right. If participants have any question, we'll take it. Otherwise, we'll close. Okay. I presume that participants have no questions at this point of time. If anything comes, I'll show it to
Deepti,
you.
Deepti, I was about to ask the same question. Sir.
Yeah. I was asking, because she's in charge of entrepreneurship development cell in a college nearby.
Okay.
So she's a convener there. So that's what she wanted to ask. Anyways,
Okay.
I think we have clarified that. So, dear Lakshminarayanan, thank you very much for your time.
Sure.
And you have been a great help
Always.
for our startups also. And you can reach out to him. Do you have any number or anything you can share so that they can reach out to you?
Yeah, I'll just type it out. You can always reach out to me through this number.
So they are based in Chennai. In fact, he never came here. So still we are able to communicate and coordinate. I think that's possible. Wherever you are geographically, we can still take help of
Correct.
people.
And today everything is digital, so
Right.
physical presence is not much required as such.
Yes, right. So, okay. Thank you very much, sir. Have a good day.
Thank you, everybody. Thank you.
So, dear participants, we'll be having now lunch break. Maybe we'll be back at 2, and we have afternoon session by Vikas Fatke. Yesterday you heard